or they can have food security. So this will bring trust, because first they will see that the product works. They don't have to wait 18 months, 24 months to realize that protection, mutual protection works. And second, it's really bringing a value that when they need it. So that is one example on how technologies, not complicating things, on the other side, simplifying things, can improve usability and trust. And yeah, I think I leave it there.
Okay, thank you, Maria. And the questions have already been flashed, so it reminds me that it's time to respond to the voice from the ground or voice from the audience there. And that is something many a times insurance companies fail to acknowledge and address, and that's also results in trust levels. But let's start with the first question. Can microinsurance be the first product for financial inclusion? If so, which solution and how to package it? Who would like to take it? And answer should be brief.
No. Sorry, I don't think that it is the appropriate first product for financial inclusion. The first one is you need to be able to have a payment gateway to make collections in small units. I know in the mutual model it may be a bit different, but from my commercial side, where we work with mobile wallets, mobile operators, the payment gateway comes first.
I think you cannot beat credit in terms of perception. As in, this is something that we have seen for 14 years. Credit is the most demanded product. Let's be very upfront about it. I still do not understand why this question should be the first product. It should be a product that should be offered, yes. But again, calling it micro kills the entire spirit behind it, because when you're talking about insurance, you also want to grow with your customers. So we might have started with something very small, but as members get in, and that's how mutuals started. Well, whenever they started, mutuals have 3,000 years old history. So they did not become $200 billion companies, overnight. So they have 200, 300. The ones that exist today have 200, 300 years of history. So that's my point with insurance. And which solution, how to package it? Well, health takes the first thing, because if health does not work out for you, whatever you have earned can be lost. So I think health makes a lot of sense. That's something that we have learned from our members. Second comes life. So we were a little astonished. We thought life would be first, but in our surveys with our members, we found health to be the topmost priority. And how to package it? I think if you sell insurance only for hospitalization claims, it won't work. We started this program primarily to answer the question, what happens to my money if you don't fall ill? So if your package does not include anything beyond hospitalization, the very slim chances that you will succeed, unless it is completely bundled in. You don't care how it is distributed.
Yeah, I think one comment there, from my opinion, financial inclusion is a holistic thing, and it comes also with education. So yeah, I would say that can microinsurance be the first product? I agree, is no, but it should be a package that goes with education, last mile, like how you pay. Maybe in the mutual it's more cash because it's organized, but of course payment methods being bank account or mobile money, so the ability to get to your customer and the customer to interact with you, and of course credit and insurance should be a bundle, because otherwise the customer will be so risky that we'll never get a credit and we will get into a catch-22.
Thank Thank you. I think let's move to the next question, and probably we'll have time for only the second one, and we'll come back with the rest. Regarding the second one is group-linked insurance often being touted as microinsurance. What is micro and what is macro, basically? And any examples of significant solutions in the space? So who would like to take, Kumar or Brandon?
I think in Philippines you have card MRI as the most successful mutual solution. So you don't need to see anywhere. Card is doing extremely good work when it comes to life insurance, and they have recently got into health insurance also. That's a product that you can see because they settle their claims in 97% of their claims in 1 day, or then 3 and 5 days. So doing pretty good that way.
So there's a difference between, as I understand this is the embedded insurance, because in insurance group becomes a technical term. Examples would include every type of, so it's not product, it's distribution channel. In Latin America, the business that I started for AIG in 1998, by 2007 was the largest business AIG had in the region. And we were doing home, dental, hospital cash, gadget insurance, simple term life. So the magic is not so much in the product, but in the method that it's distributed, the way it's packaged, the price point, and the way the services are then provided at the back end. So Latin America, I think part of the magic there may have also been just an increase in people's incomes. There's a tipping point at which insurance becomes the must-have product, and before that, the must-have product is food, or is shelter, or is a much more basic thing. But once people are able to take some risk off the table with an insurance product, there's a great demand for it.
Then very quickly, I think we can still squeeze in the answers. The panelists' answers are very, very brief, but let me also keep my promise. Insurers are notorious not to keep their promise. Could you please expound further on the business viability of a microinsurance product, which I also asked Brandon whether it's viable, and how the existing distribution framework and capital, how does it incentivize private insurers in the space, basically?
Okay. So the economics of insurance require scale. Think of a micro loan, which has a 25% interest rate on a $400 loan. That's $100 nominal dollars every year to pay for one's expenses. An insurance policy that might cost $20, where we want to target an expense ratio of 10%, which believe me is very difficult in insurance. That's then $2, and the insurer is not going to be 50 times more efficient than the lender. They have to do 50 times more business than the lender. So the economic viability comes from either stripping management out, very much the pure mutual model, even blockchain model, or going to very large scale, mobile operators, mobile wallets, others that can reach very large numbers of people in order to start the business. About insurers and their view on risk and what is interesting and what is not. When I started at Zurich, I said, the first place I want to go is Indonesia, and I was laughed at, and sort of 10 years later, they spend hundreds of millions of dollars to really buy into the market because suddenly there's a rush to work in Indonesia. So I think there's a risk perception part. Things come into trend and out of trend, and I won't try and explain the insurance industry and how they think. I'm just trying to change it.
So maybe for the particular case of agriculture is on a scale, of course, but also in making process as automated as possible, back office and front office, and the ability of working from remote. So if you have a small scale farmers that will have half hectare, 1 hectare, and you have to move someone just to check the field, they already took all the margin, or it becomes really, really expensive. So your ability to automate things and the ability to react from remote to save cost, so being scalable and cost efficient. And I think that's the difficult part from the insurers, to transform their business, and that's why they are not entering in this field alone by themselves.
Thank you. Let's now go to round 2, and let's start with Brandon this time. For Brandon, you are working with mobile operators, you were mentioning to me. And insurance is not only a matter of trust between the insurer and the policyholder, but also it is a matter of trust between the insurer and the technology platform provider or a mobile operator, and also the trust between the mobile operator and the customer also. So what are those specific issues one should keep in mind basically? And I also don't see much, well, we hear a lot about technology being a panacea, but I don't hear much about how the cost of insurance can be brought down with the use of technology. So what are your thoughts on this?
So on trust, we have to respond to each phone call that comes in from a customer, assuming either that person is having a bad day or they might be having the worst day of their life. And to treat them that way on the phone, but also to know that potentially it's somebody that's not having a bad day at all, and that is in fact trying to make a fraudulent claim. So trust becomes very central to how insurance works, and the idea is that the person who answers that call, there's a concept of in reinsurance called follow the fortunes, which means that everybody along the chain has some, let's say, skin in the game in identifying who's the person who's having a bad day or the worst day, and who is the person that is not, and making sure that the incentives are structured so we do front end, last mile servicing for clients, that we aren't just trying to rush a customer off the phone, either by paying claims that may or may not be valid, or by denying claims, but that we have the right incentive to properly adjudicate the claim and try and get to the bottom of things, to make the product itself a quality product. Arup said in his opening comments that it's different than other products. We actually have to know, a loan, maybe it's borrowed for a sewing machine, maybe it's used for a cow or some pigs or whatever. We have to know what the money's used for, so it's quite different there. How is technology going to help? The scale that I mentioned earlier is impossible without technology. I mean, it's possible, but it's just not affordable. One of our competitors has 3,500 outbound call center agents in order to make the sales that they do. And while it does generate sales, what's the plan? Are they going to have 15,000 and then 150,000? I mean, ultimately, is that a scalable business? To a point, but it's always going to be an expensive one. So I'm a great believer that it's investing now in AI, investing now in understanding through A/B testing which messages work through a mobile wallet or mobile phone or whatnot. But as I think's already been said, there's no panacea, but the elements are that.
So as it appears in the fintech space, and insurtech is the new buzzword along with fintech. Maria, the next question is addressed to you. what needs to be done? Because we need to work with a coalition of organizations and partners. It's not insurance companies alone. There'll be a lot of other organizations and institutions in this ecosystem. So do you have any particular approaches in mind in terms of providing that regulatory comfort to regulators to recognize innovation? I mean something like a regulatory sandbox, so that it helps them to calibrate regulation with the risk characteristics of the policies, risk characteristics of the policies, of the risks which they are thinking of underwriting. And in doing so, the regulators, of course, have to promote growth and inclusion, but then we also hear a lot of bad press about the unintended consequences of technology. So how do you balance this growth versus stability? It's a difficult thing, but let me hear from your perspective.
Yeah, so maybe I explain a bit what are we doing now, because as you say, we are the new kid on the on the block. So currently, I mean, the company is based in Luxembourg, and we have two countries where we operate. One is India in the south, in Tamil Nadu, and the second one is Niger. And we don't address the end customer. We work on a business-to-business way, so we work with partners in each country, and they help building the mutual, or the mutual already exists, and we just add a service for that mutual. So in that sense, we are more a software provider, a platform provider, than obviously not an insurance provider, but still, since we started, we had an open and regular dialogue with the Luxembourg regulator that is quite open. It's called CAA, and Commissaire des Assurances, and also because, I mean, I'm not coming from the insurance sector, but my colleagues are, and we have also good dialogue and understanding with the international associations of insurance supervisors, and with Access to Insurance initiative, and we are part of Microinsurance network. So we it's not that we are impatient, but we try to balance our willingness to act with the understanding that the regulator has to take care of the consumer, and they have to protect them. So we need to explain them that what we are doing is good for them, and that we are not breaching any of the stepping stones of customer protection. And in the case of India, our partner, they already provide a mutual for health, and therefore they have the green light, let's say, to add on top a crop. And in Niger, we met the insurance regulator in Niger, but they rely much on the group of West Africa, it's called CIMA. So we went to the regulator, we explained, we discussed with them, and they granted our operations. And now the next step is to go together to CIMA when we are going to scale in Niger. But I think it's clear that the regulators need to adjust their, let's say, their requirements to the acquisition power of the people they try to protect, because otherwise it doesn't match the level with what they are protecting. So our approach is to work and discuss with the regulators and the supervisors, and try to create a positive environment where step by step we build an ecosystem of trust.
Thank you. I think that's a good thing to do also. We often hear of sandboxes, but I think knowledge sharing amongst regulators is also very important. If two regulators are having a conversation and one says, yes, this works, don't have to worry, we have tried and tested it, it gives some comfort. And then with more exchange of information, a similar type of innovation can be recognized in the country where some new flowers are beginning to blossom. I moved now to Kumar, and I was discussing, when I invited you to join the panel, I had a discussion with you, and you mentioned that you have been using technology amongst your members, and it has worked very efficiently, and the message I got was it helped in repairing the trust also between the insurer and policyholders. It's not only use of technology to service your clients, but also in repairing trust. And I also had privy to some of the videos you shared. But that's a very good thing what you have done. Can you explain a little bit on what actually you did and whether that type of an approach can be scaled up successfully?
We have been using, I thankfully have looked at a lot of models. I still do not understand when you say technology, because everything is technology. So we started with a model where women decide on their own health claims. Doing that would have been a nightmare without a software. So in 2004 when we started, we were one of the first organizations to have a software that actually was built through with the help of an actuary. So we have been doing that. They would meet once a month to decide on the claim. So by design, the claim settlement time was about 30 days. If you did not put your claim then, it would go to another 15 days. Today we do it in 2 hours. We don't use blockchain, we find it extremely expensive right now. But existing technologies allow us to settle claims faster. What we have done is, in the last 2 years, because we were, your question of whether microinsurance is feasible or viable, it takes about 6 to 8 years on a minimum to give an answer to that. We have done it in 9 locations in 14 years. 7 have become self-sustainable, and technology has played a humongous role in reducing cost. On the services side, what led us to build trust was that we used to meet every month where how much premium has come in, what claims have gone, what is the reserve pool. This was discussed with members and everything was transparent. Now when we decided to scale, we realized that you cannot meet people like that every month. So we now have an app, member-based app. Only if you're a member you can download it, it's not freely available. So where you see how many members are there, how many claims have been filed, how many claims have been given, what is your reserve, how many health services have been done, and you can do voting through that app. So in a mutual governance is key to insurance. Insurance as a business for us is more governance. If people don't cheat, it will run. So it's as simple as that. So we have invested a lot in governance, and we feel that given the cusp of technology, India is in with the unified payments gateway, we can scale this up. In fact, we are trying to build a model where we would really scale this model faster and to 10 million lives in the next 5 years. So yeah, that's
good. So let's see what are the new questions now. Let's move to the 4th question. We don't have any more questions. People tend to buy insurance from the people they trust. And issue of microinsurance is more of traditional sales distribution rather than digital, since we tend to serve the marketplace. Do you agree?
think like Buddha will take the middle path. Their parents definitely want the traditional systems, but the kids want, because they have the mobile phones. My app is not being used by my main policy holders, it's being used by the kids who are also members. So, and they keep checking on the app. If you ask me who's using your app, it's basically the children of my members. So I think the difference is very clear. But what we are also seeing is that thanks to the mobile payment gateway system that is coming in, paying for a premium is becoming easier. So while we settle claims all cashless, we do collect cash on the upfront when we are doing this. So I think it's a question of mixing the two. It is not always you have to be only digital. I think people who take only digital path, well, I've not seen the business models, but in what we do, I think it's a mix of touch and digital, both.
I mean, if you had told me years ago that I'd be climbing into strangers' cars in the Philippines and Mexico and whatnot, I would have said you're crazy. But today I do it regularly. And so it is definitely a mixed model.
Well, maybe I add that